Welcome back to the channel. This is Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. This video is brought to you by my subconscious. I've had this one on my watch list. It's been eating at me almost every day because I had a mental note that once Urban Outfitters broke out of our box here, I forget the name of the box, Darvis box. It starts a freaking massive, insane run. And I think we're on the precipice of that. By the time this video comes out, Merry Christmas, by the way. It will be Christmas and it will be 10 days past this recording date. If I do buy this stock, I will let you know in my YouTube community page. I share all my purchases there for my Robinhood account challenge, by the way, which is going extremely well. I can't wait to release a video on that January 1st, showing um, my year-to-date growth and beating out like Kathy Woods, Warren Buffett, Meet Kevin, just random, beating out all these people. Again, I'm not a savant or a quant or whatever. But I will talk my strategy and hopefully, it can translate to something that we can all take away for 2025 and continue to crush it. So, we're looking at Urban Outfitters. Sorry for the tangent, but look at what we got here. I made a video on this a while ago. Right here, this candle is literally kissing and sitting upon this all-time high line. Why is this important? Take a look. Do you see what I see? So, stock doesn't go back that far. We're going to go ahead and look at some advanced charting. We're going to do some calculations to see what the projected stock price could be. Potential targets, obviously we're going to look at $54, but ultimately I think we're going to get to 68 in the short-ish term. And when I say short-ish, I mean 6 months, maybe earlier. We were in this box down here for a decade. Let me just confirm. 1994 to about, come on, baby. Let's see. About 1990, so about 10 years. 10 years, massive, went from $6 to 34, and then it traded in this box again a decade. And now we are right here, and it looks like we are ready for takeoff. So what I want you to get out of this video, because this is for me as well. This is not financial advice or trading advice. Talk to your CPA who wants you to get a financial product with them and pay them a monthly fee. Do that instead. But we're going to see what the potential stock price could be using my calculator. That is extremely important. We want that plus the business growth plus the charting to all be aligned. With all those three things aligned, we've got ourselves a trifecta, which means we've got ourselves a beauty. Are we there yet? We're going to find out. So, again, we look at the bigger picture first, and then we whittle our way down if we need to. However, we're looking for inconclusive evidence that this is a gem, a needle in a haystack, as you would say. So, obviously, we've got like this momentum right here. This looks like the nail in the coffin, in my opinion. The last time we saw a cross to the upside this high was never. Well, 2019 when it got this high. Okay, hear me out. And we're not even at that oversold level. So this is fantastic. Where money flow is not even the same level. We're going to see what institutions and hedge funds are doing, because we've got a nail. I think this is a nail in the coffin right here. Money flow, if our money flow is at all-time highs, that's two nails in the coffin, which is even more evidence that the technicals are looking good. And then our relative momentum indicator, we are almost getting hot, like too hot. And we're not hot yet. Look at this period. This was from 2003 to 2007. Nope, 2006. And let's just confirm here. What date was this? 2003, June 2003 to 2006. If we can catch a multi-year momentum of heat, I think we will. And I do say that because that was when we broke out of our box. Look, when we broke out of our box, holy cannoli, just boom. Like years of major hotness. Obviously, we would have wanted to sell here. Could we have predicted that that was about 2005, November 2005? Let's see if we could have found that. November 2005. I guess it's October. No, but November 2005. So we are technically almost at that same, we're almost at the same height of that channel right here at $54. I think the height of this next strong move, depending how strong it is, pause. This stock went from 6 to 34, 300%. If the stock goes 300% here, I think we're looking at, and this is right here, by the way, right next to that purple channel. If we get to this purple channel, that's 90, that's about a 100% move. I will take that all day long, baby, all day freaking long. So, very excited about this. Here's my background, by the way. We're going to go ahead and run our numbers here in just a moment. Let me just clear this out. Okay. So, right here, major takeaways. Let me move my head. Major takeaways. They are profitable. They're a big box retailer that is profitable. Their quick ratio is a 0.75. Normally, we like to be at 1 or higher. However, a lot of big box chains, look at Ross, Target, Starbucks, Papa John's, Urban Outfitters, you name it. Macy's, Nordstrom, you got it. They're usually they can be very over leveraged and under one. They are profitable. I love that. They do not offer a dividend. I could see that changing in the next 5 years if they continue to crush it. Forward price to earnings at these current levels, if they continue with their margins, which are 34%, that is high growth. They continue with sales, their EPS, excuse me, they are undervalued going into 2025. So, again, earnings per share next year, 7.9%. Earnings per share past 5 years, 2%. So that's positive. Sales, 6.44%. Again, they're positive, although it's not the most beautiful, outlandish numbers. They're positive, and I think that's a huge takeaway for a big box company that appears to be really crushing it and doing well. Their debt is 0.47 down to 3.37. So they are addressing their debt, which is fantastic. Again, they're profitable. I could see them offering a dividend down the road. I wouldn't be a fan of that, but that's typically where a lot of these big companies go. I would like them to get a better cash on hand situation before they do that. Get their quick ratio over 1, have it stabilize and stay over 1. Do some risk management analysis. Look at the worst of the worst black swan events to blooming economies. We always want that over 1. So they need to do a risk assessment, and if they can keep it over 1, I would be okay with the dividend. At this moment, they need to stay where they are, and they need to put any extra cash towards their debt or just hold on to it. and get that quick ratio over 1, it would make them extremely more attractive. Like that would probably be the catalyst to move them to 60, 70, 80, 90, 100. So yeah. Shares float under 100 million. Like just a quick sneak peek. Like this is just gorgeous. 97 million shares back in 2020. 2024, we're down to 92.28. So there's natural and organic accumulation. These are going down, which is beautiful. Sales are continuing to climb. 2024, we're actually at a trailing 12 months of 5.4 billion with a B. Huge. Earnings per share, 3.5, 3.05 so far. They do have one more quarter to announce or present. So that'll be 2025 that they do that. So again, overall, this is looking divine. Divine, baby. Okay. Market cap, we're going to go ahead and run our projected stock price, 4,900,000,000. Good for them. They are profitable, 329 million, 910 million. Wait, 329 million, 910,000. Sales, 5,400,000,000. Insane. Other items to call out while we're up here. There's some shorting going on. I would not advise at this moment. Just want to call out. Last month, November, they had 38.6 million shares traded. December, we're halfway through. We're at 21.2 million shares traded. We are on the trajectory, the path of getting over 40 million shares traded on an up positive candle. This is going to be fantastic. What I could see happening, and I'll probably reiterate this again, but just going to say it, we could see the stock break to new all-time highs. I mean, it already did kind of, maybe like $60, and then come back down and test this $52.12 level. That would be a healthy test. It would confirm that the stock is ready to move up. So what I'm planning on doing, and I'll post about this on the 16th of December. You're watching this on Christmas. Merry Christmas again. Whatever, if you don't celebrate, or if you celebrate something else, Merry whatever, happy holidays. You'll see me post on the 16th. I'm going to be buying $25 worth of this on the 16th and likely the 23rd. My goal is to get one share going into 2025. I'll talk more about that on my video coming out later. So blah, blah, blah. Anyway, let's go back to our calculation. Okay. Let's just see how we're doing. This year, we 1.3 billion compared to 1.2. That was Q. Oh, they did. They already reported their 4 quarters for 2024. So remove what I said about them reporting 3 quarters and then reporting 24. They already reported, so they're good. Okay. Q3, they did 1.35 compared to 1.2. Q2, 1.2 compared to 1.1. Q1 this year, they did 1.3 compared to 1. I'm sorry, 1.48 compared to 1.38. Gross profits, we are seeing up across the board. So this is, again, just absolutely double thumbs up for them. I would be selling too, honestly. Like this company's crushing it. So Trisha Smith, Merry Christmas. Yeah, Merry Christmas to everybody who's selling. Good for you. Okay, back to our calculation. They do have 522,960,000 cash on hand. Total debt, 879,350,000. Okay, total assets 4.4 billion, total liabilities 2.1 billion. That is absolutely stunning for a big box retailer to have 2 assets to 1 liability. That is money. So congrats to this team. This is just gorgeous. Just gorgeous. Just very gorgeous. Okay. And then looking on an annual basis, I just want to do this really quick. Last year they had 884 million. Wow, so they took, look at this. This is very, very interesting. 2020 or 2019, no debt. 2020, 1.137 billion in debt. Fast forward 1 year, $1,074,000,000 in debt. Fast forward another year, $951 million in debt. Fast forward another year, $890 million in debt. I'm sorry, $884 million in debt. Fast forward another year, $851 million in debt, 2024. So this is good. This again, they're getting that quick ratio over one. It's coming. And let's just go down here. Quick ratio. Oh, beautiful. They used to have it in the ones right down here, right when their debt was not where is it? When their debt was not there. Now they have the huge debt. Again, it's flatlined from these 2 years, and now it's heading up. So we are going to see some amazing things come from Urban Outfitters in 2025. That is just my opinion. So back to our calculation. Sorry, I'm getting very excited about this one. Okay. Okay. Shares outstanding 92,280,000. Right? Yeah. Potential stock price of $111, which is exactly, let's go to our advanced charting. So we have the business is doing fantastic. What I want to see and what we are seeing, they're paying down their debt. Their quick ratio is improving. Oh, let's look at their gross margins really quick. Apologies, we're going back down. Sorry for your eyes. Gross margins, we want to see that. I would say staying above 30, honestly. Gross margins 32, 34, 31, 25, 32, 29, 33, 34. They had 2 years under 30, and this one was about 30. Oh, this is just, I might be selling some stock to purchase this stock. That's how excited I am about this one. Um, okay, so the business lines up. That's A plus. Technicals A plus. What am I missing? The business, the technicals. Oh, institutions. So institutions own 74%, and it says they're selling here. I'm gonna go on a limb. I'm gonna say this institutions own more than 74%, and that is because number one, they are crushing it. Number two, they're they are improving. This company is still improving and innovating. And this company's been around since the 80s or 90s, 93. The balance sheet's improving, income statement's improving. This company is just adopting and staying relevant. Also want to go through here. Whoever the viewer is who said to look at their latest presentation, I do want to just point this out. I'm trying to incorporate this in my videos. Apologies. Okay, so look at this. Nuuly. I don't even know what the hell a Nuuly is. Probably a clothing company. Look at this trajectory here. The segment sales for the third quarter increased by 48% to 97 million, driven by a 51% increase in average active subscribers. They are innovating. They're staying on top of their subscription business. They're staying on top of their tech. Like, this is amazing. And you can see they're kind of highlighting what we discussed here, just improvement overall. You can go through this. There was another thing I wanted to see. Okay, so this is kind of important. So their capital spending, you can see, has been decreasing, which is fine. Um, think of CapEx, capital spending, as you are spending money to make a return on that, which is okay. Like, you could see they were spending less money, but making more money. Now what we're seeing for projected 2025, they're spending more money on their stores, net capex of net sales. Technology is a little bit higher, fulfillment and home office. So it looks like they are getting ready for a proverbial rocket ship. And I say that because they have tested in true products, they have tested in true customers, they have tested in true sales, revenues, profits. They are taking a risk. They're going to be spending more in 2025. for potentially a higher return. And I totally, as a potential shareholder and someone looking into this, I fully agree. They have proven to themselves and to the public and to shareholders that they know how to stay innovative. They're adapting, they're managing their costs and their spend, their debt, all for this. So overall, fantastic. All right, so sorry for that little cutaway. Now looking at institutional ownership, old data says 74%. I say, and it says they're decreasing or institutions are selling. I'm going to say, no way, Jose. Institutions are buying. Old data, 74%. New data, 88%. Did you see that? 88%. This, let's just open this. This is the highest institutional ownership since about June of 2023. So I think we are still particularly early. And I don't think big money, I don't think Wall Street sees what we're seeing right now, which is great because this is trading at the same levels back in 2019. 2019, I mind you, I can't see their sales down here. Let's see down here. 2019, they did 3.9 billion. Mind you, we're at 5.4 billion. We are crushing it compared to 2019. Yeah, so absolutely crushing it. Almost the same level as 20 May 2015. So the company has been crushing it since then, just all good to go. So let's now go back here. Areas to watch for a potential downside. Ooh, kind of looking like an ascending triangle here. I would say, and let's get this going. $48.84. Look for a potential retracement there. In my personal honest opinion, I don't think we're tracing back down because we're halfway through the month. People are buying like crazy, like they have been the past couple months. Like, dang, this was $35 a month ago. So I think we've proved we are lifting off here, in my opinion. So $48 potentially if we see some pullback. To the upside, again, $54 is gonna be our next target. After that, 67. Our projection said 111. I'm thinking 90 to 100 over the next year or two, as long as they continue to crush it and their spending, their investment they're putting in just crushes it. So again, last time we saw this leg go up like 300% from 6 to 34, 33. 52 to 100, I think that should be doable in my opinion. So yeah, this company is doing very well. Year to date, they've done 46%. So good for them. They've deserved it. I regret not getting into this back when my subconscious was yelling at me. So yeah, this is the trifecta. I'm going to be buying into this one quite a bit for 2025. Don't follow me. Don't copy what I do. Talk to your advisor. Talk to a professional. Thank you so much for watching. Merry Christmas. Happy holidays, whatever you celebrate. If you don't celebrate, ignore me. Have a wonderful day. Take care. Talk to you soon.